Traders, happy Tuesday. Welcome back to the final hour. It is just after 3 p.m. on the 15th. Let's go live. Let's talk about the markets. It's down. S&P is on a pullback day. We are down 0.74% and counting in the final hour. S&P down 0.75%. NASDAQ down double that, 1.4%. Dow is down, probably matching the S&P, pretty close to it, 0.71. The Russell clinging to some gains, have a little rejection here near the highs, but still hanging out about 0.6% on the positive side. Volatility really hasn't jumped up a ton, only about 4.62% on the VIX. If I go to the VXX, we're at 53.61, up 2.8%. So not a huge jump on the VIX today. Price-wise, things are actually fairly cooperative. We had a nice little chunk of profit this morning on the daily profit play. So right in here, we grabbed a couple of trades for some profit, ended up grabbing some more trades in here for some profit. It just slowly worked its way down in the afternoon, which is why I don't like to hold this trade anywhere past like 2 p.m., 2:30 p.m. Eastern time. For that reason, just in case we have directional moves late in the day with those price sensitivities of options. So on the day, even though we're down 0.75% in the market, I was 4 for 4 on the daily profit play today. Also added some trades in on Snap, which is up a little bit. I bought it at 11.01. It's up to 11.15. So that should be a couple of bucks of profit. Added in a couple of trades on the SPY. This actually is, if we get down to 575, let me check on something really quickly. I shared this in my Discord. Let me check my Discord. So I've got the buy trade on Snap. I go into index trades. I got the SPY calendar spread. All right, so the SPY calendar spread cost me 29 cents. Let me see what this one looks like here. So SPY, and go to the calendar spread. So this is out to the 18th and the 25th. Let's go 18th. This is the call side, 87 and 93. So that trade is, if I show this one, see if I can zoom in. So there's my butterfly. Risk about 45 bucks. Live prices right here. I know it's kind of chunked into a bunch of other stuff. Prices right here. Pin price is around 590. If we get a bullish push at all this week, that's on one side, and then I've got the calendar spread on the other side. So that should be here. Get rid of that. Go to the SPY. And this was a October 25th and 28th. So one here. One here. And let's take a look at that one. There's just a lot of stuff going on. It's starting to junk those all together. All right, give me one moment. We are just dropping a little bit more the last 5-10 minutes so far. Calendar spread. Let me have a look at just the P&L on this one. So we're down to 579.13. So right now, it's about break even. I got into the trade for 29 cents. I'm looking to see if price will come into my peak level on the calendar side. Here is what it looks like from a risk graph right here. So live price is right there. And I'm looking to see if price just pulls back in this window. If it does, if I can turn a 29-cent debit into, let's say, 50 cents credit, I'm okay with that as a profit target. There's a peak here that could be potentially $2.25, but that's going to be based on getting this, basically pinned. I'm just going to keep an eye on this. We still have to go down a couple of bucks, but if we get to this like 576 or 574, 575 is my pin price. I'm looking for a little bit of profit on that trade over the next week or so. All right, and then Snap was right here for an add-on trade, trading at 11.11, so 11.11, make a wish. Bought some shares at 11.01 to 11.04, adding a long put for protection. It cost me 21 cents, so my break even is going to be, actually update this here, add a long put for 21 cents. So break even is 11.22 to 11.26, because I bought some shares at 11.04, bought some shares at 11.01, but this is a post earnings, which is October 29th, and a kind of post election protection on Snap. So I'd love to see if Snap can get a good earnings print and get back up and fill some gaps. We got a couple here at $13, nearly $14, highs up here at $17. That might be wishful thinking, but I still like to trade. If we pull back into the lows, I'm giving myself a couple weeks on time. But if we go very quickly back down to $8, then this $21 debit might be trading for something at the money, and an at the money with a little bit of time left in it might be worth something. So let me have a look here at the trade for Snap. And if I go to trade, let's go out maybe election and the 15th expiration. I should have like a 13 or 14 day window. So what's an at the money trading for? An at the money put could be trading for as much as $4 to $5. So I could essentially take, oh, I'm on the wrong instrument. That would help. So let's go out. Let's see what like a 1 to 2 week out looks like. So if I'm at the money, I could see a 20-cent debit trading for maybe 50 cents, 60 cents. I mean, that's not terrible. I would get a 100% gain, maybe 150 to 200% gain. That's enough to lower the cost basis, add some protection. If we have a huge jump to the downside and it actually gets in the money, let's say that Snap drops below $8 and we come into maybe 7 and change. Well, that hopefully turns a 21-cent debit into, maybe a dollar. So if that is the case, that lowers the cost base on the shares that I own, and I'll just aggressively look to repair. But in essence, I'm looking to see if this will fill the gap. If it does, I might actually take profit on that gap fill. If I can generate some income here, put in $1,000 profit, and do it with very little risk, like not even playing earnings, not even playing the election, I might do that. So it just depends on what the trade gives me. Okay, ASML, we'll take a look at it. ASML. 718.01. We have semiconductors. Yeah, I don't know, man. This semiconductor stuff it's going to be volatile. You should expect some pullbacks, and if you get them, they could be pretty ugly. But let's have a look at the company itself. So ASML Holding. Let's go with this ADR. Earnings forecast to grow, trading below estimated value. So it's pretty close to priced in at fair value. Let's see what the price to earnings, price to sales look like. A little bit high in the price to earnings. Let's see what the peer average is. It's pretty fair value. Now we did have a huge drop. This is crazy. This probably didn't update. Did this all happen today? So this stock, I mean, I would not want to catch this falling knife. But with an option trade, I'm sure the IV is a lot higher. You might be able to generate some income here. We did have a miss in earnings. No, we didn't. We just had a drop in semiconductors. Holy crap. So earnings, better than expected on earnings per share, better than expected on revenue, but the stock is down 17.63% on the day. Let's see what SMH is doing. So semiconductor ETF is down about 5.5% today. How about SOX? SOXX is down 5.28% today. Interesting. How about NVIDIA? NVIDIA is down 5% today after testing all-time highs. NVIDIA is still trading over $3 trillion market cap. Look, this is my outlook on NVIDIA. This has not touched a moving average for over 400 bars. I would not be surprised to see NVIDIA stalling at these levels and working its way back down to this 200 EMA or back into these support levels before I start to get a little bit more bullish on the outlook of NVIDIA. If it blows through these highs, I'm not chasing it. I don't like the idea of being long NVIDIA right here. I think this thing is absolutely priced to perfection. And I'm not saying that it can't go higher, but if we go higher, we are likely going to have a nasty fallback. And one thing that's happening with this stock being now like 2 or 3 in the world, largest market cap, the scrutiny is that much higher. The performance is that much more important, and it's going to sway the market a lot. So, and I'm not saying NVIDIA can't do it, but let's see if there's any reason. Unlikely S&P 500 stock leaves NVIDIA behind with two. Oh, never mind. Next gen, doubling data speeds, text slides Tuesday afternoon. Okay. I don't know if there's anything specific on NVIDIA for today. Let's see what this says. I did see this morning. I read this. U.S. government is considering limiting AI chip exports from NVIDIA Corporation and AMD to certain countries, especially in the Persian Gulf, where investments in AI data are rising. So yeah, export limits on AI chips. I mean, that's just bad news on the day. I don't know if that means anything or has any real influence. Nvidia to me still looks good in the $100 mark. I can keep this very straightforward and just try not to overthink it. I like the technicals of pulling back. Okay, it's growing like crazy. Insiders selling like crazy. I just pulled up an app today called Autopilot where you can follow, politicians and hedge funds and things like that. Seems like Pelosi has some pretty big uh, positions in Nvidia. But that also could be buy more shares, buy more shares, buy more shares. And I don't know. It'd be nice to see Nancy Pelosi / her husband get proven wrong at one of these, insider trading type results. Price earnings, price to sales. So this is what I don't love. Current price is 138. Current price actually 130, but fair value is at 92. This is where I'm personally trying to get positioned in Nvidia. I know that you have to pay a premium on stocks that everybody loves, okay, and stocks that should be looking good, but competition in Nvidia is going to heat up. It might not be now, it might not be this year, but it might be within the next 3 to 5 years. Not everybody wants to rely on Nvidia for chips. And if everyone's going to start making their own or start to make better chips faster or make better chips higher quality, better performance, I mean, Nvidia is in the race now and they've had a head start. But I think this is good to have competition. And I just think after not touching this thing for 400 plus bars, you know, I think it makes sense technically that we don't go much higher than 140, right? Which would have been $1,400. And it's amazing to me that the number 1, 2, or 3 stock in the world, it's been all over the place. When we got up here, it was number 1 in the world, market cap. And then it quickly faded, right? I mean, this is extremely volatile when you think about the number 1 stock in the world. How consistent has Apple been for the last decade plus? Apple is essentially traded hand in hand with the stock market. I mean, that's very safe. It's super liquid, but the volatility is minimum. I mean, look at the beta here. We've got a 3 beta on Nvidia as one of the top stocks in the world. Okay, go to Apple. Apple has a beta of 1. It's basically the same as trading the benchmark, which is the S&P. So anyway, I'm just saying. I mean, if I go back to Nvidia, I want to see if we can actually push a little bit lower here. I hope that we can. Let me bring this up. If we push lower, great. Where am I looking to get active in Nvidia? Anything in the low 100s, I will start positioning for it. Okay. Anything that bases here at 100, I'll get some Nvidia positions. I could dollar cost average. I don't know if I'm willing to take the shares. I probably would. I don't mind putting like 5K or 10K on it. But I want to be really aggressive with options, using it as income strategies. So yeah, I don't mind it. But that's really my preference. So to answer your question there, Harry, on ASML, I don't know, man. I mean, ASML, IV should be up, IV should be higher. We are below the 200 moving average here. The one thing that's a potential threat is structurally that trend line breaking today. So having a very fierce candle to the downside, I don't know. Let's see if it pulls back into like 600. Fundamentally, I don't remember looking at this one. I know we did. Okay, fundamentally, it's pretty fairly priced. So if it has like all this upside, I mean, sure, fair value at 911, we're trading at 717, so that's good. I mean, you're getting this now at a discount. But do I like it at 700, or if there's any more momentum here, do I like it more at like 600? Well, if you ask me, I mean, I'd love it at 600. So 600 would be great, and 400 would be fantastic. Are we going to get to those levels? I don't know, but I'm probably not going to throw anything on it right now. Okay. And why exactly this down today? I'm not sure. Plunges after leak Q3 results in 2025 downgrade. Okay, so this was supposed to be this morning. So what about leaked results? That's interesting. Apple stock on the cusp of a record high. iPhone outlook might be shifting. All right. Chips and oil stocks drop. Let me see what this says here. So Europe semiconductor giant faces worst one-day decline since 1998, falling over 15% after an unintentional early release of its third quarter earnings. Well, it was supposed to be pre-market today, but whatever. Leaked results revealed a 53%, get out of here, 53% drop in bookings, far below market expectations, despite a 20% increase in net sales to $7.5 billion. This discrepancy between strong current performance and weak future demand triggered a broad sell-off as investors scrambled to reassess the company's growth trajectory. Obviously, I'm just reading to you, but the real hit came from ASML's revised 2025 forecast. The company lowered its sales outlook from 30 to 35 billion, down from the previous 30 to 40 billion. Okay, I mean that's 5 billion is a big deal. This revision stems from delayed demand for ASML's EVU lithography. I can read, right? Lithography machines, crucial for manufacturing next-gen chips. While the boom in AI-related chips remains strong, other segments with a space there. Let's see here. Recovery more slowly, adding to investor concern about long-term growth. Problem. So yeah, it's just the AI space is here. Here's the concern. Is everyone investing in AI going to see a dramatic return on capital, a dramatic return on investment? That's the uncertainty. That is probably this is probably what AI means to a lot of people. Okay? What does AI mean to Google? Okay? They're all spending like crazy because they can. But investors want to know that they're not overspending. Investors want to know that, okay, fine, this is R&D, this is building infrastructure, this is investing in the future, but nobody really knows, how it pays off. Now, the argument is like, oh, this is just like the invention of the internet, and this is the next phase and the next expansion. Maybe it is. But does it come with hiccups and does it come with issues? Are there going to be bans on AI because it gets too personal too quickly? Is it displacing workers and causing, does AI cause a recession? I have no idea. And so rather than go down that rabbit hole, this is what AI really means. It saved the market this year as the buzzword. And now the reality is it still buzzworthy? Maybe it is, maybe it isn't. But if these stocks are dropping and everyone's revisiting, 2025 forecasts or these actual outlooks and profitability, it may not be good enough fundamentally to look great. So rather than paying so much for these valuations, let's see if technically the market can give us some more attractive levels. I'm fine with that. So the same thing is true on SMH. Just look at the broader semiconductor space. Okay. I mean, this pattern, look at how this is behaving, by the way, from this top to bottom. The way this price is behaving, something tells me that we might be sideways on some semiconductors. Why? Because we put this big top to bottom swing in, and this is up and pulling back, and it's up and it's pulling back, and it's up and it's pulling back. This is either forming a wedge on the right side of this reversal pattern, which is a head and shoulders trade, by the way, or this is going to be enough to possibly get all the way back up to these highs. And if it fails at the highs, then you have a range right back down to the lows at 200 bucks. So that's what I'm looking at, right? So rather than just buying everything on SMH, I'm probably just going to wait and see if I get better prices, trade a lot of options around it, and just leave it alone. So if this structure breaks right in there, then we're probably going to correct more. But I could see the market just finding ways to buy the dips, be all bullish on semiconductors, and let's see what happens at this resistance. Now, if this didn't hit the 200 EMA, I'd be way more top heavy, which I kind of am on NVIDIA. I don't know if NVIDIA can really go much longer. Okay, I mean, this was a very aggressive pullback towards the 200 EMA. I don't know if NVIDIA can go much higher without actually rebalancing this trade. So from this high to low, this thing when we hit the high, we were about 43% overextended from the 200 EMA. So ultimately, price is going to come back to it. If we go to something like a 500 moving average or an 800 moving average, price pulls back to these, and these become big reversion levels as well. So I don't think it's a surprise that news breaks today and price is down on NVIDIA at these highs. And we have earnings on NVIDIA on the 14th. If the IV is high enough, I'd probably sell premium on NVIDIA. But it is also after the election, so maybe we have the markets opening up the floodgates and saying, "Hey, let's rip," So I don't know. I'll probably just pick my battles. I've got a lot of ratio spreads on NVIDIA when we sold off in that July-August window. So if I were to own NVIDIA, my break-even prices would be like $70 or less, and I'm happy just letting those sit there with some income on top of that. Okay. All right. So I know I just kind of went down a little tangent there on Harry's question for ASML, but I'm not looking to buy the dip. That's my short answer right there. Why? We're breaking structure here. It could be a short-term thing. I would trade options. If you're interested in buying the dip, I'd trade options. simply because it's defined risk, but I wouldn't be buying this thing, literally buying it at 720 bucks. I'd rather see if we have another sell off to low 600s and maybe even, 500. I would be glad to get a discount on this thing if we go down to, let's say 500 to 450, get a 55 to 60% discount. Now we're talking. I'd be way more interested in ASML. Okay. Good question. All right. What else do we have going on here? I'm in the process of at the top of the hour, I will be live with the A1 Trading Discord community, or the A1 Trading Community Discord, at 4 p.m. If anybody is a member of the A1 Trading Discord, I'm going to jump into a live session and also talk some top strategies with the community. So we'll wrap up this session for my final hour, probably around 3:50 p.m. And at 4 p.m., I'll jump into the A1 Trading Discord and we'll talk some shop. I'm just going to share some of my favorite strategies, trading stocks or ETFs, trading options, and trading the Forex market. So we should be able to cover an hour in no time. That'll probably fly by, but some good stuff there. And also, if I have anybody interested, this just got posted in my Telegram channel today. So today, here is there's an inflation playbook that I'm putting out. Basically, it's for 2025, and there's a lot of reasons. Look, we already see the proof right now. We just saw sticky PPI as well as sticky CMI or CPI, and then we also are starting to see that the Fed's landscape for 2025 of cutting rates is starting to change. The Fed's looking to basically shave about 50 to 75 basis points, where they won't cut as much as what the market was pricing in and anticipating. PMI numbers have come out hot, which means the services sector is up. Wages and jobs seem to be up as well. There are inflationary pressures. Oil is a big factor right now. Global demand. Look, I mean, I don't want to say that oil is going to be the single make or break for inflation, but it certainly can be. Obviously, food and energy prices have been higher in the past and have come down a lot since 2022. But basically, if oil goes lower, your overall CPI might continue to dip lower. But right now, we're seeing some stickiness out there with year-over-year CPI, year-over-year core CPI, year-over-year PPI, and those numbers came in hotter the last week. Right? Did the market care? No, we hit all-time highs. Right? We hit all-time highs. Does the market care? No, because what the market is pricing in right now, besides this pullback today, what the market is pricing in is another 25 to 50 basis points by the end of the year, which does remain pretty darn high if I look at the Fed watch tool. So let's go to the Fed watch tool right here and take a look at November, December. I believe this is over 90%. Yep. So we have a 94% probability right now. This has grown all day, by the way, and yesterday too. We have a 94% probability that we will see a 25 basis points cut a day after the election. So Tuesday the 6th is the election. Wednesday the 7th is FOMC, and then we have Friday the 9th, which should be non-farm payroll. So that's going to be a really interesting week to see how does the market digest it all. We cut another 25 basis points. Does the market love it? What happens to the yields out there? What happens to bonds? What happens to the stock market? And then December, same thing, 86.2% chance that we cut again. So that'd be 25 in November and then 25 in December, basis points, so 0.25%. All right. So right now it looks like the market is pretty certain that we're going to see another 25 and 25 cut go into January. Looks like another 25 cut go into March. Another 25 cut going into May. This is where we start to see pauses. Okay. So if this is the case, and obviously this can change, cut by the Fed. So basically Q4 into Q1 of next year, this market might still like that the Fed is going to not pause. And if it stays this way, great. So this allows the stock market to probably stay path of least resistance to the upside. I'd like to see some sideways movement. I'd like to see some pullbacks. I'd like to see some dips. Not just today, like this doesn't count. One little red day doesn't count. Okay, if we put, by the way, if I put this into Heikin-Ashi candles, let me see what this looks like. Okay, look at this thing. So we've been, after this Labor Day sell-off, this thing has been turning since 546, and we've gone up on confirmation from lows to highs. we've gone up around 8.5%, just shy of that. As far as buying a confirmation, I mean, Heikin-Achi candles are known as trend bars. There's a little bit of dips here with some indecision as we had like post-Fed indecision. We had a breakout last week that pushed. We had an all-time high again yesterday with that Columbus Day melt up, and the market's pulling back a little bit. But is it doing any major damage? Not really. Not really at all. So let's just go back to candlesticks. So one red day, one day doesn't make a trend. We'd have to do some pretty serious damage if we're going to take out, any lows here, then sure, maybe that's enough to make the market stop for a second, think about some volatility, see where the VIX is at as we come into the election in a couple weeks, right? Conscious is asking about my Discord. Yep, I'll post that. So I've got 2 channels to join here. If you'd like to join my Telegram channel, you can. I have a free Telegram right here. Let me find the link. So this is for Telegram. So this is Chris Pulver Trading Telegram. You're welcome to join that. And then also my Discord, invite, copy, and this is Chris Pulver Trading Discord. There you go. Okay. So you can join the Telegram, join the Discord. If you'd like to join me for a Sunday webinar, I know it's not the most convenient time for many of you, but it's not convenient for me either. But I'm going to do it. And the reason why is because there's a trade that I want to prep you for Monday, which is going to be part of my weekly windfall service. It's going to be a waterfall income strategy. That's what I'm calling it. Basically, it is I just want to trade things routinely, mechanically, systematically, and they're really simple to trade. It takes like literally less than a minute to execute the trade. We do it once a week, and there's a reason why. And then we have the broker. It's basically set it, forget it trade. We have consistent wins. We have defined risk. We have very low cost to take the trade. And there's ways to scale this in a big way. We're trading super liquid instruments. So I do have a link. If you'd like to register, I included it in the description for this session, and I'll do this for the next 5 days. But I think I have the direct link here. If you'd like to join me, you can sign up for it, register for it, and that inflation report is also included. So if you'd like to see my inflation playbook, you can jump in with that registration link in the email, and I'll throw you that PDF. So let me find that link right here, and I'll throw it in the chat. Okay, so this is a Sunday, 12 p.m. Eastern Time, waterfall income webinar. And I'm doing this myself. So it's just me, just you and me, all the traders that join, and we'll be ready to rock and roll and start to rip on Monday. But I thought, let's just get it out there. Let's do a weekend webinar. It will be recorded. You can ask for the recording. You can get it. All that stuff is fine. Okay. All right, there we go. Okay, so SPY is down 0.85%. Qs are down as well. Take a look at some gamma levels. Float them out here. I'm hoping. So anyone that was in my morning session this morning, did you exit with me with a small loss on the long calls this week? So I took a 579, 580 long call. When price started to break, I just assessed. All of a sudden, my gamma level started to change in real time. I canceled, so I got out from a 203 debit. I got out with $1.55. So I took a 48-cent loss there, okay? 48-cent loss. And then I turned it into a butterfly spread just in case we're to come back up and try to retest the highs for the week. So I took the loss there, but I basically took another trade for 45 to 49 cents debit, and that has a profit trap of around 6 to 1. So, in addition to that, I put in a calendar spread if we get back to like 575 or go lower. I also have some hedges in here. Okay, I just want to make sure that we saw that all happening this morning. I posted that for my daily profit play here. Closing out the 589. This is all updated around 10:19 this morning. So shortly after our session, I closed out for that small loss, and then I switched it around to a butterfly for 45 cents. I'm risking $45 to make $250 on a peak. I get that's like at expiration on Friday. But in case there's a window here, I could still turn a 45-cent debit into maybe a 80, 90-cent profit. Anyway, and then we had some wins on daily profit play today, which is actually great because considering this market is sold off all day, daily profit play wins, and that was 1 and 3, 4 for 4 on the day, and that's a pretty good way to start things off. Okay, all right. Seeing people jump in the Discord live, that's awesome. Thanks for being here. One thing on the Discord channel for me, I don't send friend requests. and I don't send direct messages. You can initiate, you can send them to me. My handle is Real Chris Pulver. You see it in the public chat every single day, but I don't send friend requests. And the reason I don't do that is because I know scammers do that crap, and it's not me. So I'm just making it very clear, like, I don't send friend requests. You send it to me and you send me a message, then I'll reply. But I keep it out there in the public every single day. Okay. All right. Good stuff. What are all these deep terminologies? Yep, I get it. So that's a great question. And another thing that I'm building, this actually is going to be part of my weekly win or my waterfall income strategy. I'm doing this. So my waterfall income strategy, I'm actually pairing with that a practical options course because I have increased my options trading tenfold since like 2016, 2017. I trade probably 80+% of my trades right now in my stocks and options portfolio is option trading. And I do that because it's leveraged if I need it. It's risk defined when I want it. It's so much easier to manage my risk and my profits, and I can trade pretty much any asset that I want. Trade it with options. I know the risk, I know the reward, I know the probabilities. It makes trading so easy. I don't know why people don't want to learn this stuff. I know that it's not the easiest thing to learn right out of the gate because they have silly names for things but I'm calling it practical options because I want to teach you if you see the market a certain way, I want you to think about how to trade that with options, okay? And so there's a good example here. Are you hourglass trader? No, I am real Chris Pulver. This is my Discord right here. This is me right here live, real Chris Pulver. Okay, if I show you right there, this is the only account that I have. Now, I promise you, if somebody sends you a friend request and it looks like real Chris Pulver, it's not me. So double check. I've joined Discord since June of 2022. I have all my pieces right here. And look, scammers are crafty. They try to copy the same thing, but they can't have my exact same profile. So I'm real Chris Pulver. There's no period. There's no hyphen. There's no dots. There's no double letters. It's the same and the same. So real Chris Pulver from June 8th, 2022. If you have a question on that ever, come into my free group chat and just ask me, right? Live right here, and I will come in with my name. I've got it on my phone all the time. I'm on the computer 12, 14 hours a day. So ask me, right? So this is how you find me. There's a lot of nonsense out there. And honestly, I hate Discord because of it. I really do. But it's a great way for me to have all my content, all my, you know, services and everything from what I have in the industry, from discounts and links and education pieces and webinars and my analysis every single day, any charts I like, any index that I'm trading or any asset that I'm trading, I can put all my content in one place. That's why I'm using Discord, because it's pretty easy to keep it organized. The problem is all this stuff happens behind the scenes, like friend requests and direct messages, and people try to scam you, and I freaking hate it. So unfortunately, well, look, just use common sense. It's not me. Yep, there you go. So Papa John says was solicited for your trade service. Right. All that crap is not me. Right. My services right now, I have a daily profit play service with InvestPub. I'm going to have this waterfall income strategy with InvestPub, and I'm running a full Pulver Alerts service with A1 Trading. And so that's kind of broad market, broad everything. I trade stocks, ETFs, I trade options, I trade futures, I trade currencies. That's A1 Trading. So it's like whatever I'm going to trade, that's A1 Trading. But very specific courses with full education, live sessions with me, all that stuff is right here. So Waterfall Income will start on Sunday. We'll have a nice webinar at 12 p.m. I'm also putting with that a universal course that I want to give to everybody that is interested in trading options. And this course by itself, I'm going to try to have this so it can be an a la carte purchase. So if anybody wants to just have an options course, this is going to be the best way that I could teach a child or an older trader with, let's say limited tech savviness. I just want to teach you how to think about the market in terms of options. Make it very realistic, very simple, very practical, right? So when you see the market and you want to, communicate that to, I want to trade it this way because I'm bullish or I'm bearish, use options. And so that's the goal of my course. Okay. All right. We are breaking yesterday's low in the SPX. Yep. Let's take a look at that. We are breaking yesterday. I mean, we broke yesterday's low by a lot, right? So we had the close on Friday right here. Okay. A couple things. Interestingly enough, we took out the intraday low from yesterday. We took out the close from Friday. I think it's going to be difficult to see the market get to all-time highs again this week. That's probably what I would say first and foremost is we're going to struggle to get to all-time highs. Okay. So does that mean that I'm crazy bearish on this? Not necessarily. One thing I could look at here is, let's see, if I wanted to, let's do this. If Ivy is up a little bit, I might take a trade. Let me see what it is at the money. It's probably going to be, I should have taken a butterfly, a broken wing butterfly yesterday when it was sitting here up at these highs, but fudge muffin, I didn't. So let me see here. If we get to like 5765, let me see what this is on ES. I mean, the futures market has dropped a decent amount. We're back down to Friday's levels. We're coming back into last week's, within last week's high. Let's see. Can we get, I mean, how big of a sell-off could we possibly have this week? So if we get down, I mean, that'd be a 1.8% sell-off. Could we get there? Maybe. If I put in a futures trade around 5,800, let me price something out really quickly. This should be something relatively cheap. I'm going to go to the ES market. This is S&P futures, and I'm going to look at Friday. I want to see on Friday, do we come back below? Let's go to like 5,800. So if we get below 5,800, I'm going to put in a, this is going to be a butterfly spread with calls. So I'll go call fly. And if we are going to 58.50, if I sell that there. So if price falls, this isn't a bad play. Now 240 times 5, that's going to be making about $100. This is about a 1-to-1 trade right here. I get 125 if I'm right, and I would have a max profit trap around 375. So the trade would look like this. If we go from current price, which is around 58.57, if we fall below 58.50 and stay down there, okay? So if we're, maybe talk price here. So if we fall down to 58.50 and we stay there for the week, okay? I have a max profit that my butterfly trade look like this. If we fall, I'm trying to think how to draw this on the risk graph. It would be, I'm looking for price to fall. Here's my risk, okay? Here's my profit trap. Here's my tail credit. And this is the trade. So I would risk about $117, okay? If I'm right on the trade and I make it out here, that's $125. If I pin my price, that's about $350. And this is a trade that I'd be pinning by Friday near end of day. Okay, so this is one way to express this trade. Now, is the market going to be, that's it? Like we have a 1% sell off today. It's at 0.86. Is that it? The market pulls back, 0.86% and then just goes right back up? Maybe. And maybe what I want to do on this trade is, look at something where I get a better fill. So rather than accepting 265 credit, maybe I should try to get $3 credit. Let me see what this looks like. So that'd be 150 with a max risk of $100. How far in the money do I have to get in order to get this trade the way I want? So let me price this up a little bit. So if I did a 58.35, 58.40, $3 credit, I'm going to try to do this trade. I'm going to pin this thing at 58.50. Okay, and I'll create my broken wing. This is traded for 275 credit. I'm going to put in a $3 credit. And this is going to be an ES trade. I'll put this in my Pulver alerts for A1 trading. And I'll post this in just a little bit. By the way, I do have to run in about 10 minutes or so and then get ready for my live session with the A1 trading group. That'll be at 4 p.m. But I want to look at this trade. So I'm going to put a pending order here on the 18th. If we get below this price, I should be able to generate, this is $100 of max loss, which means if price goes all the way up here, price just goes higher than where it is right now, this is all we get for a sell-off, then I'm going to lose $100. If price goes down and goes way down here, I'm going to make probably $150. Let me see what that trade is. So if I review and send, I get $150 on the trade. And if I am spot on with the pin price, let's say that we go down further and then pull back by Friday end of day, I can turn this into a potential $400 winner. So I've got a $100 risk. I have a tail credit of $150 as long as price goes lower, and then I have a max profit of around $400. Okay. So I like the setup. I'm going to go ahead and take this trade here. It's not going to fill because I'm going after a slightly higher credit, but I'm going to see if this trade does get filled. And this is a trade for Friday. Let's see. Do I go further out here? 58.10. Actually, you know what? I think I'm going to take this trade out to next week. Let's go out to the 25th? I'll go out to the 25th. Try to take this trade at 58.50. So this would be a put butterfly, call butterfly, and then I pin it at 58.50, create the uneven broken wing that is, okay, so we're going, interesting. So now my max risk is $250. I'm going to try to get like $7 credit for it. If possible, what's actually 3 out of 5? If I go 3 out of 5, that's a 60% take profit. I'm going to try to get $6 on this trade. $6 on the trade. If I'm right to get $300, my max risk is $200, but I've got a profit trap of $800. $650. 325, risking 175. Not bad. If I go $7, I don't know. It just increases the risk. I don't necessarily like the trade any more or less, but let me see. 350 with a risk of 150. I like that trade better. All right, I'm going to put it out there. It's a hedge. My max loss is 150. My max profit should be 350. Or not max profit. The tail credit should be 350, and then my max profit on a trap would be 850. But that's out past next week. That's going into the 25th. So I'm going to place this trade pending order. Okay, I'm seeing some comments here. 2 biggest earnings this week, Netflix and TSM. Yep, Netflix is down a little bit. TSM, will take a look. Is it TSM? I didn't even see TSM in my image this week. If I go to, hang on a second. Oh, that's it? Fudge. I thought I had some earnings plays. Dang it, it got deleted. Yeah, I shared this in my Telegram. Where's it at? I thought I shared it. I know it's somewhere. Maybe I shared this in my Discord. I don't know. Anyway, I didn't think that TSM had earnings, but let me take a look at it. All right, I'm going to put this trade on. This is a $7 credit pending. The way this is going to get filled, price is going to have to pop back up. If price pops back up so if we go from like 58.50, let's say back up to 5,900, then this trade may get filled, and that's a very small risk for reward. So I get 350 if I'm right. If price ends up falling back down by the 25th, I'm only risking 150 on the trade. So I'm going to take this trade. It might not get filled. If we keep falling, it's not going to get filled. But I'm going to try to take this with a higher reward to risk. Okay, so I'm going to send this trade out. Right here, $7. That's going to sit there and marinate in the broker platform. Send this out here as well. Okay, and I'll get this ready to rip. Okay, give me 30 seconds to get these all entered in. Okay. Okay, so that is pending. And let's see. So ES1, I put in a broken wing at 58.50. Sell 2. calls. There was a skip strike there, so that was a 40 by 70. And then 58.70 by one call, $7 credit pending. Okay, so right there around that 58.50 mark, see if we get through that. 58.50 is right in here. Okay, so there's my 58.50, putting the trade in. Now, in order for that trade to get filled, I probably have to see price pop back up a little bit by another maybe 25 to 30 points, see if that's enough to stay where this is going to be an in-the-money broken wing call fly, if that's the case. So if that gets filled, great. So I get basically for a $10 spread, I'm getting a $7 credit. So I'm risking very little on the trade, and I'm happy with that. And I'm giving myself out to next week as well. So this is out to the 25th. Okay, broken bone bricks. Yeah, I saw that. I watched it on the plane on Sunday actually. Lions beat the crap out of Dallas, which is pretty cool. All right, let's have a look at some other stuff before I go. I have to jump here in just a couple minutes. So we've got DJT. That's Trump Media and Technology. Holy crap, that's just down in the day. Did this thing come ripping back? I mean, I don't even know what to make of this stock overall, other than, I don't know, a bunch of QAnon people trading it. I don't know. So, I mean, this stock from being as high as $175 to now off the lows at $12.98. I mean, I don't know. Trade with the most ridiculous caution ever. I have no idea if this is good or bad. I don't know if this is even going to pop up, if there's any history here to trade it. DJT. So highly volatile, revenues declined, shareholders diluted, does not have meaningful revenue. I mean, come on, man. Price to sales at 1,700. There's not enough data to calculate really anything. Peer average is 1.8 and it's 17.1. I mean, I don't know. I'm not going to say it's untradeable, but I just have no interest in it. Is it something you can trade with options? Maybe. What's this? DJ. So we have Trump Media and Technology Group Corp, which is DJTWW. That's a stock, but it doesn't have options. You have DJT. We can trade options. This does have weekly options from the looks of it. We have earnings on the 8th. I mean, if Trump is going to win, is that a call option you'd be willing to take? If you buy a call option, you're paying a crap ton for it. Holy crap. Look at this. If I want to go in the money and go out for a leap, this is insane. I would be spending on a 70 to 80 delta call option. That is a crazy amount of premium that you're being asked to pay. Here's an example. I don't know if you can see the numbers very well, but we're trading at 26.40 right now. If I do, and typically when I go long options, I like to buy like a 75 or 80 delta, because if price goes your way, that starts to get to 90, 95 delta. That starts to get to 100 delta. That's the same as owning the stock, and you do it for a fraction of the cost. Obviously, time is a factor. But if I were to buy an 80, let's just go with $20. We buy the $20 call option. The broker's ask price is $16.75. So if you spend $16.75 on a $20 option, your break even is 36.70. The current price is $26.50. Okay. You are spending on that option an insane premium, because if you go 36.70 minus 26.40, that's a $10.30 premium on top of a $26.50 option, or $26.50 price. That's nearly a 40% premium that you are paying. I mean, I don't know. I just have no interest in doing that. Now, if you were to make it a debit spread, meaning if I want to buy this deep in the money and I buy this for $16.50, and then against that I sell, so that gives me a break even of 36.50. Well, if I sell, let's say the 40, if I sell the 40, or even better yet, I'll just take the $10 one. Let's go up here to $47.50. That's a $10 sell call. So if I buy the 20 and I sell the 47.50, that gives me $27.50 of potential profit, and I'm paying $16.40. If I take this out, I'm going to pay about $6.30. So I pay this. That's my profit gain. Okay, if it gets above 47.50, so what's the difference? We can turn a $6 debit into about a $19 profit. Now that is good. Now, how does the trade work out? If you did this, you would have to have this stock for the next year if I want to go out to January 2026. So am I confident this stock is going to be over 47.50 by January 2026? Am I confident this stock's going to even exist by January 2026? I don't know. Those are some of the risks, right? So there's always a trade-off in options, right? Dr. Jim Schultz from Tasty Live for Tasty Trade has always said for years, for every gimme, there's a gotcha. It's so true. There's hardly ever a misprice or an edge that it's like, I'm exploiting this. There's tons of things that the market reveals. There's order flows. There's all sorts of gamma squeezes. There's all sorts of, volume and open interest, and all this stuff plays into how the market's flowing in the background. There's dark pools. These are real, okay? But for the most part, what you do with the options market is efficiently priced. So I just think this premium is outrageous, and I just have no interest in doing anything with the stock. So if it pulled back to, $13, would I want to buy it? As an investor, maybe. As a trader, maybe. But I have no clue. So probably best just to stay out of it and just enjoy, get the popcorn, watch it. If it goes up 1,000%, yippee skippy for those who have it. If it doesn't and it tanks and it disappears and goes to zero, that was a risk we took initially, right? So I don't know, uncomfortable with that trade overall. All right, here's the deal. I'm going to take a 5-minute breather before I jump into my A1 trading session. Let's see here. Any chance you be able to record? Yep, I can record it. So yeah, I'm gonna record my session for the A1 trading team, and we'll use that. We'll splice it up a little bit as well, so that'll be good. All right, that's it for me today on the final hour. Just a couple more highlights before I go. So daily profit play service that I offer. I trade this with members every single day. Daily profit play. It's a 9 a.m. session that we run. We're getting ready to trade around opening bell every single day. We've got the I collab with A1 Trading. At 10:15 a.m. Eastern time, and then my 3 p.m. to 4 p.m. Final hour. I guess I should switch that, right? Final hour. So this is my daily routine. So daily, a final hour, 3 p.m. to 4 p.m. I'll just put 3 p.m. Eastern time, and in between there, I'm trading, I'm updating, I'm recording videos, I'm creating stuff. So that's why I said on Sunday, which is going to be October 20th. 12 p.m. Eastern time, I'm doing a waterfall income webinar. I posted the link. If you want to see that, I will post that link one more time right here. So copy link, throw this in chat. This is Sunday, October 20th. Let me make sure that is the date. Yep, that's the date. Sunday, October 20th. Get out of here. 20th at 12 p.m. Eastern time. Waterfall income. There's the registration link. With that link, you'll get a inflation report from me in 2025, a little bonus. With that course, we'll be trading every single week. We will also be managing trades if and when needed. The idea is to just snowball our profits. And on top of that, I'm doing a practical options bonus that is going to be how I'd like to teach anybody to trade options with zero experience. And this isn't just like, oh, it's just super basic. I'm going to approach this from the most simplistic to the most advanced. Like, I'm going to try to cover so many different levels of options where I just want you to start thinking about, if this is what you want to do in the market, trade options. You will see that it is the best asset to trade, to risk way less capital, tie up way less capital, and get the same type of returns. In my portfolio, I can essentially use 25 to 50% of my portfolio and my buying power, trade options, and generate returns that are comparable to if I was 100% invested. Okay. That's a powerful thing. And so I always have dry powder, and I always have things where when we have anomaly type events or outlier type events where we have these, let's say COVID happens again. It's not COVID, it's something else, but the market drops to 5-year discounts or 10-year discounts. I want to have dry powder to buy that stuff because that's how wealth is created. If you can buy these multi-year discounts, once we get back to highs again, it might take some time, but once we get back to highs, man, the gains are just exponential. So that's the power of options. But I want to teach you that. Cool. All right, sounds good. All right, I'll let you go. If you're in the A1 trading community, I'm going to pop in here live in about 2 minutes. So I will see you in just a moment. All right, thanks. And I'll see you tomorrow. Daily profit play, A1 trading, final hour, the huge. All right, thanks for being with me today, everybody. Talk to you soon. Bye.